team, welcome back to another live stream. We're back here on the channel. Let me know in the comments or in the live chat if you can hear me loud and clear, if the audio is good. By coincidence today I have the gardener from across the street who is cutting the hedge, so it sounds like somebody's being murdered, but I promise you it's just the gardener. But today, guys, we have a special guest in the building. We have Jan from the Trading Pit, a good fellow friend of mine who I've been to Madrid with, who I've been to Cyprus with. And today, guys, he's going to be here on the stream together with me, analyzing the markets. And in addition to that, also sharing some fun facts about what it's like to work for a prop firm, but also, some fun facts about the Trading Academy X, the Trading Pit. Obviously, one of the, let's say, the main preferred prop firm that we use personally for our main account is with the Trading Pit. And today Jan is here to kind of like answer some questions that you guys might have related to obviously just analysis, because Jan himself is also a funded trader who has also done payouts. So he's going to be here to show his perspective on the market potentially, but in addition to that, also answer some questions either in relation to a prop firm, but also in relation to some analysis. So let's just check his audio, see if you guys can hear him. So Jan, maybe you can say a few words. Let's see. No sound. Okay, let me fix that. Give me 1 second. Okay, Jan, if you start talking now, let's see if that works.
There's a little delay to the live, so we just wait a sec. Can you hear me?
Let's see, now it should work. There's a slight delay always in the stream, so it's just going to take 10 seconds for everybody to kind of like hear you, but it should be working now.
Okay.
Yes, now good.
Okay, look perfect. So guys, then I'm just going to start all over again. Fabio, thanks for this legendary introduction.
Of course.
A pleasure to be here today. It's been a crazy year, not only in the markets, with all the macro forces coming together. The rates, geopolitics, trade policies, liquidity like crazy, but also in the broker and prop firm space. We had a great year together with the Trading Academy. And that's just what we want to look at today. It's kind of a fireside chat. We look at the markets, we look at certain perspectives. And I'm very glad to be here, Fabio. So thank you for that.
Yeah, fantastic. Yeah, no. Okay, guys, the audio should be good now. So I think everybody can. Yeah, I put them louder, so everything should be good now. So yeah, guys, like I mentioned, Jan is here today from also just being personally a friend, but also for the Trading Pit. So you guys can answer or ask him some questions later. For now, what we're going to focus on mainly is just checking in with what happened, because we had quite a lot of data released here on Forex Factory. So if I just pull up Forex Factory here on my screen, what you guys can see is that we had average hourly earnings come in worse than expected. We had core retail sales come in slightly better than expected. But then we have NFP as well come in slightly better than expected as well. And in addition to that, we had retail sales and unemployments. So we had quite a few numbers come in. Some a few were worse than expected. And this is currently causing the dollar to drop slightly lower, or on the initial push, it pushed down slightly lower. Now, as we can see, it's pretty much at where it opened directly. So NFP ultimately came in slightly better than expected, but at the same time, some other numbers coming in worse. So I have some mixed feelings on this overall NFP release. So we're going to have to check and see what happens pretty much later today, see where EURUSD ends up trading at. If I look at EURUSD in itself now, we've just taken out a major liquidity high. If we look here at the 4-hour time frame, what we can see is that the overall analysis from this morning's market outlook has pretty much played out so far. We've taken out this major liquidity high here. And this for myself is a liquidity high, which I was monitoring for a potential retracement back in towards the downside. So what I am monitoring at the moment is a potential retracement down. We can see this kind of like ascending correction in towards the highs. We're leaving behind quite a lot of liquidity. There's no guarantee, obviously, that we're going to sell off from this level, but we'll be monitoring the overall fractal structure shift here on the 4-hour time frame. So let's monitor that, see what happens if we can form somewhat of a supply zone here to then get maybe some short-term shorts back in towards, let's say, this bump in the road over here at minimum. That would be my short-term target. So if EURUSD can break this overall 4-hour fractal low, then I do see that there is potential for a drop in towards a downside, which would be around 60 pips. Nothing too massive, but for those who trade the lower time frame, there could be a potential short-term short on your hands for you guys on EURUSD. Obviously, looking at the daily time frame, I've talked about it quite a lot. We can see here that we've had the impulsive phase in towards the highs. Within that impulsive phase, we've come back down towards the lowest low here, and after that lowest low got taken out, since then we've been continuing further in towards the upside, after which as well the over order flow shifted with this demand zone now being in control here. So let's see, I'm looking for a retracement down lower to then look for some future upside once again. If we quickly just check in with gold, we can see that gold is pumping. Obviously, gold mostly pumps when we have relatively bad news for the dollar, because when dollar goes down, gold most likely will go up. So I am still looking obviously for those upside continuation plays on gold, and only focusing on longs there. Jan, maybe you can share a little bit more about what kind of like pairs you trade yourself and what you've been looking at.
Yeah. Obviously, it is EURUSD. That has been proven to be my best pair over the year. I think it was a very one-sided bet. It's also, remember back in the days when we had the live session on the Trading Pit channel, where you were kind of replicating the fact of the accumulation, manipulation, and then the distribution of the dollar. I think this is exactly what we've seen the whole year, with dollar melting down, Euro-US dollar, just going for the 12% year over year right now. So that has been really good. I'm enjoying GBP JPY. It's been a crazy year as well on that side. The higher time frames were indicating a strong pound, or a weak yen, I should say, in this case. And obviously, gold. We've also seen this in your community. The most traded asset was gold, indeed. So around 6,000 trades have been executed on gold from the Trading Academy throughout the year. It has been a crazy asset for brokers, for prop firms. We have seen a very one-sided market, and that is also, the fundamental aspects, of course, driving that in the back end.
All right, well, that's interesting to know. So the most traded pair by the entire Trading Academy on the prop firm Trading Pit is gold. What's the second most traded one? Or maybe what's the second most traded one? Do you know that as well?
The second one is Euro-US dollar.
Yeah, EURUSD, obviously.
Yeah, just short of 3,400 trades executed from you guys. And then right after we are seeing something that you also spectate a lot, obviously, is the pound against the dollar.
Yeah,
GU. This is the third one.
Okay, interesting. And who has been the best performing trader from the community?
So we have seen two very interesting things happening on your side with your community. So I'm not sure if you are there, Berto Devre. He has managed the absolute fastest payout probably in the whole year. It was incredible to see 21 days after he started the challenge, he already had his funds on his account. So he crushed the challenge super fast, went straight through the first payout, received his money back. So 21 days, this is an absolute, brilliant and fast execution. The highest return we've seen from Chi Hong Wan, 14.8% return on a 20K account with us. So holding this account ever since, very stable. And this is what we see with the whole Trading Academy, or with most of your traders who really stick to the plan, who see this as a long-term play, who take care for their accounts, and also like you always preaching and saying, take away your 1-2%, get the payout, and then move on. This is something that we can really constantly see with your traders.
Yeah, guys, what other questions do you have for Jan? Obviously, now's the moment to ask any questions that you have. Maybe, you've been sitting with questions that you want to know before getting started with a prop firm. Maybe you have a question right now about your trades that you've been taking on a prop firm account. Obviously, Jan is from the Trading Pit, so it would be ideal if you ask Trading Pit related questions. But do you guys have any questions for Jan? Anything at all? You can ask anything in relation to prop firms or in relation to the Trading Pit. Are there any kind of like specific questions that you guys have? And in the meantime, we see that EURUSD is reacting very well to that overall liquidity high. Interesting to see. I hope that we can start seeing somewhat of a pullback. NZUSD not really doing anything. ADUSD not really doing anything. GU took out its own high here. I'll be monitoring this one for a potential turnaround. I do see there to be potential shorts on GBPUSD if we can kind of see a market structure shift back in towards the downside. So I'll be monitoring that as well. What is the best prop firm? I think that's an easy question for Jan, guys. Is he a day trader or a swing trader, Jan?
I had to change my approach. So I was day trading, but now I'm really into swing trading. I'm also utilizing the fundamentals, the aspect of fundamentals. So that is how far Fabio and Rutger have influenced me already. Yeah, I think it's very important, and we've seen this throughout the whole year. Fundamentals have played a great role in the market. So I could constantly see you guys utilizing that as well.
Yeah.
Yeah.
Good point. I see that there is a question. So the average trade people do a month. So how many trades do people on average take a month? Do you kind of like have an estimate of that?
That is an interesting question. I have not checked that, to be fair with you. But what we always see is the less the better. So also with our accounts, being very favorable for your trading style of swing trading, day trading. We see the less the better for sure.
Okay,
so
good to know, guys. So the less trades you take, the more probable it is that you're going to be a profitable trader. That's interesting to know, or at least let's say long-term keep those funded accounts. What I want to know as well is why is the rule that you can have 400k max funding but only 4 accounts and not like more 50k, for example? Not sure myself about
overall we want to, this is a goal for the next year, to also give you guys the opportunity to merge accounts. So we believe the more accounts you have, the more trouble you will have in maintaining and really trading these accounts. We believe with 4 accounts you can like you guys do as well, do an AB. So you copy 2 accounts and copy 2 accounts on a different strategy or risk appetite. We think that proves to be correct, the correct way. Too many accounts, it's just a mess. So Mitchell asked if there is more than a 400k allocation, and indeed we have something like this. And this was also a point for Fabio and the team. We are a prop firm. We A-book our traders. So when we have a track record and when we see that you guys are taking it serious, we will bring you to the live markets. So we are on the same side as you. You will meet our management team, our risk team, and you will be A-booked, meaning we copy everything you do to make money with you. And Mitchell, when you have a track record and when you trade longer with us, there are certain deals that we can make around it. Yeah, it really just depends on how well do we know you. The meeting we have had with you to understand your strategy and your risk management, and then obviously we can scale even higher for sure.
Yeah, good point. So how many trades on average does a successful trader take? So I think that's kind of like an open question. Like Jan mentioned earlier, it's, let's say, the less trades that you take, more likely the more sustainable, long-term and profitable you will be. And I think that can obviously, let's say, be around 2 to maybe 8 trades a month, because obviously with 1 or 2 trades, you can already do, let's say, 3% in a month easily. So I think that's kind of like an answer to your question on that side. Jan, how many years have you been in trading? And maybe a better question in relationship to that is like, how do you get involved with working for a prop firm? Because obviously, like a lot of people might think like, okay, getting to work for a prop firm, were you a trader before that? And did you just see like, hey, I'm losing money with trading with prop firms, maybe I just want to work for them? Or how did that go?
Yeah, that's a very good point. That's a very good point. So I started 4.5 years ago. 4.5 to 5 years ago, and it was the back in the days where the conditions have been really crazy. You had to go through a challenge in 30 days. It was all super hectic, and it was kind of feeling like the Wild West. So I lost funded accounts with my Forex funds. I mean, probably most of you guys still remember these times, and Smart Prop Trader. And I was so frustrated because there was kind of the moment where I could, finally get some payouts, and they got rid of my accounts, and I was just like, what am I doing this all for? What is the time? So I did some research, and I was like, who in this industry means it in a professional way? Who in this industry wants to help traders? And I came across Ilimar Matush, our founder from the Trading Pit. We have an own broker called Tickmill since 13 years in the business. Ilimar, he's really for the traders. It's an incredible businessman and human being, and he's such an humble guy, where I thought I want to connect my experience with their vision. So I changed my strategy to more long term, so I could focus on getting great communities to the Trading Pit like you guys, just to share what we are up to here. The business that we intend to do, the serious business, to really rewarding our traders for their quality of trades and performance. So yeah, that's kind of my way.
Yeah, no, great question and great answer. I do not see Forex as an option on Pit. Not sure what you mean by that, Magic. I think you just have to select CFDs and then you get Forex. So when are swap-free accounts coming?
Yes, this is a topic for the next year. We have been evaluating this in the Q3 and Q4. We will bring it next year. That's how it looks right now. I also saw the travel aspect. The thing with us is you write us an email and we take the feedback serious. So if you're traveling a lot, and I have this topic as well with my communities, just send us an email, inform our support team. They will put a note in your trading account. Our risk team will know this. So you can let us know how the situation is going on in your life right now, and we will try our best to adapt to this. So different IPs, it's not an issue, if you tell us about it.
Okay, great. Somebody's asking, can I use a fake ID to register in the Trading Pit? I think that question is kind of self-explanatory. We'll see if
Yeah.
these ever come to the United States with Trading Pit. Only trading futures as a US client changes my strategy and timeframes.
Yeah. We don't want to fool around with the Fed, right? With the SEC. So we have to decide these steps very carefully. I've seen other props now slowly experimenting with it. Um, just because the wording changed, you might have recognized this throughout the prop space, that we went away from payouts, the word payouts, and we called it now reward, to really fully go away from this monetary aspect. We are thinking about it. We are you're talking with our advisors about it, and we want to go that step. But yeah, first of all, we have to prepare fully. We don't want anything related to other props that might be kicked out there as soon as they join. So we have to see.
Okay, no, great. Then just going back real quick into the market, guys. I see some of you asking about Euro GBP. Personally, still looking for further upside on Euro against the pound. I'm still bearish on the pound and more bullish on Euro against it. So I see that there is a divergence. Last week, again, we had bad GDP numbers come in the UK at minus 0.1% GDP growth. So for myself, it makes more sense to potentially see those rate cuts come in the United Kingdom, which should further weaken the pound. Last rate cut decision, it was 4 against 3. So we had four in favor of holding and 3 in favor of cutting. Excuse me.
Bless you.
Thanks. So it's a very close decision, but I do see that there is potential for a bigger divergence now with those bad GDP numbers. So personally, I'm only looking for longs. Personally, I also see that there is potential for longs or on Euro GBP to push further in towards the upside with somewhat of a wider stop loss. Euro GBP in itself is obviously somewhat of a more dirty pair, where market structure doesn't really care about itself too much. It's more based on what the overall trend is and trying to get in on that overall trend. So yeah, with the current uptrend that we have been seeing here, every single time what you relatively have is somewhat of an accumulation phase where the market tends to move somewhat sideways and then break out in towards the upside, move somewhat sideways, break out in towards the upside. And now again, we've been moving sideways and I'm waiting for that next breakout in towards the upside. So favoring some more upside there on Euro GBP. Together with that, I'm therefore looking for potential, and it's a little bit counterintuitive, but for potential GBPUSD sells. Now, guys, if you're interested a little bit more in understanding about how I look at a pair, what I think is a very good example could be a Euro NZD, for example. And I talked about this with Oscar quite a lot, because if you go to trading economics, guys, trading economics, and you type in interest rate decisions, what you can see here is that you, for example, go here into the United States Fed funds interest rate. Okay, so what I tend to do is I tend to compare, excuse me, this with Euro area interest rate, and then I also get, for example, the New Zealand. Let's see, New Zealand interest rates. Is it the deposit one? Let me get to the RBNZ, Reserve Bank New Zealand interest rates. No. Because what you're going to see is that there is a New Zealand. Sorry, guys, I don't know how to write New Zealand interest rate. New Zealand interest rate. So what you can see happening is that if you zoom out a little bit more, so around, when was it? So New Zealand is the red line. So around 2024, moving in towards the winter of 2024. So that's around this moment in time, right? Over here, you can see that, and let me just get that back, whatever it was. You can see here that the Central Bank of New Zealand starts lowering the overall interest rate. Now, if you pay attention to my videos, guys, you know that when a country, so let me just type that out for you guys. When a country lowers its interest rate, and then especially high beta currencies, meaning NZD, AUD, CAD, what happens is that these currencies become weaker. So what we've now been seeing is that since that moment in time when, again, over here, the Central Bank of New Zealand, so New Zealand interest rate, started to lower its interest rate, which happened for the first time here in, what was it? August. So in August 2024, which is where? Over here. So August 2024, what happens from that moment in time is that that is actually the moment when the overall upside trend here starts on Euro NZD. So you can clearly see that New Zealand dollar became weaker when that overall drive or when that overall interest rate cut started to happen. Now, when do these currencies become stronger? Okay, when do these currencies become stronger? They become stronger when the central bank stops cutting interest rates or even starts raising them. Okay, so what's now happening in New Zealand is that they are not cutting those interest rates anymore, or they are even thinking about potentially raising them, which should increase the overall interest in the New Zealand dollar because the overall return on your invested capital becomes higher. So therefore, I'm now seeing a divergence because what is the potential trade? The potential trade is on the GBPUSD, where, let me just add that, where GBP is starting to cut interest rates, interest rates, and NZD is starting to, let's say, halt the cut / raise interest rates, meaning that there is a divergence starting to come because of the fact that we're starting to see the pound go down, New Zealand go up, and the wider the gap, the more interesting it becomes to then invest your money into New Zealand. And therefore, I see there to be potential for shorts on GBPUSD based on that fundamental divergence. Now, what I like about the daily time frame here is that you can pretty much see that GBPUSD has started to slow somewhat down here. And we have swept overall liquidity here above the high, meaning that we've formed somewhat of a sweep zone of liquidity, and that is this buy for the sell here. Because when a supply zone forms, when it liquidates an overall high, that supply zone in itself becomes relatively strong. Now go to the 4-hour time frame, and what we can see there is that we have quite clear liquidity here in the form of this little ball here. So what I'm now waiting for is for this high to get taken out, and then to look for a potential sell from that daily supply zone together with that overall liquidity high. So that is a potential setup there that I'm eyeing on GBPUSD, but I'm also seeing that there is potential even for maybe EURUSD to start slowing down as well with its overall drop. Even NZD-CHF, I'm also looking for longs on that, as the Swiss franc still has very low interest rates. Here on the daily time frame, we saw a break in the overall market structure, so I'm looking for longs on NZD-CHF. Furthermore, also looking for longs on AUD-CHF as well, as we have some nice opens levels here with the monthly and the free open level, together with what is naturally a very strong area of support and resistance here. So looking for longs on this as well in towards the upside. So Jan, anything to add to that maybe?
I really like the setup of the pound against the New Zealand dollar. I've just looked at GJ over the past years, and it's always that we see this retracement of like the pound getting, weakens at the beginning of the year. So this is the perfect timing. I think it's definitely a trade that you can also hold for a couple of weeks and swing trade that GBP NZD further down. Confluences are there, looking really clean.
Yeah, no, I agree. So I think GN is maybe a better short than a GJ. And the reason, guys, for that is, again, very simply said, when we look at those interest rates and we look at, for example, Japan, right? So Japan interest rates, you can see that Japanese interest rates, even if they hike, the gap is still very, very wide. So what you want to be doing is you want to always be looking for wide gaps between pairs. And one of the best examples is obviously between the United States and Japan. So if I just remove New Zealand and United Kingdom, here you can see that between the United States and Japan, there is still a very large interest rate gap, right? So if we look and we zoom out a little bit, and I discussed this a lot in my previous webinar, back here in around 2021, 2022, you can see that the gap or the spread between the two interest rates was very, very low, but it started to get bigger throughout 2022. And then if you go to the chart of USD JPY, what you're going to be able to see here, let me just zoom out for you, and we go to the weekly. You can see that around that period of time, so here 2021 moving into 2022, that is when the overall massive bull run on USD JPY came. And prior to that, we were just consolidating. So that consolidation came or stemmed from the fact that that overall spread was very, very low. And once that spread started widening, that is when the overall real impulsive phase started. On USD JPY. So let's have a look. Euro yen. What's Euro yen about? So yeah, Euro yen obviously still very, very bullish. Not looking to call the top myself on this. If I look at Euro yen at the moment, I still see there to be potential long opportunities. If we zoom out, let me just try and delete this for you guys real quick. It's not really going. If we look at this, we've had an overall strong impulsive phase in towards the highs. Market filter retraced back down in towards the 0.5 fib. If I look at the impulsive phase in towards the highs, right? So I see this is kind of like the entire impulse up, and it may seem strange to you guys that I view this as part of the impulse up, but yes, it is from the lowest point that broke market structure here. I see there to be liquidity either underneath the range here, or I see there to be liquidity where we're currently trading at. So yes, there is potential for Euro JPY to start pushing up from current levels. If we can just start getting some more bullish confirmation and break this high again, then maybe we could see the next overall push in towards the upside. I see a question in the chat about Swiss interest rates. So if we go to Switzerland's interest rate, you can actually see that Switzerland also has very, very low interest rates. It's actually also been cutting them, though they were higher throughout 2023, though they have been cutting their interest rates. But then you might be wondering, but Fab, Switzerland has been cutting interest rates, but despite that, if I look at, for example, let's say a USD CHF. USD CHF has been what? USD CHF has been trending massively in towards the downside, despite that there is a massive gap here or massive spread between those interest rates within Switzerland and within the United States. Now, this mainly has to do with geopolitical risks, guys. So obviously the market moves kind of like based on two main factors. So when we analyze a market, we look at the market from the perspective of fundamentals, where a market is driven by interest rate differentials. And second of all, we look at the market from a risk perspective. So where we understand that the market moves based on geopolitics, and let's say war/risk, right? So obviously throughout this year, what has happened, the dollar has depreciated in value massively because of the fact that what the, let's say, reign of Trump within the United States caused a lot of political uncertainty. Together with the fact that the tariff situation also affected the US dollar massively. So what do people do? They start putting their money into a safe currency such as the Swiss franc, and then they use the yen for the overall carry trade. And there's a big divergence or a big difference between the yen, and that is mainly in the overall risk profile, but more from a fundamental perspective within the country itself, where the debt to GDP ratio in Japan is a lot higher, which causes naturally people to, let's say, prefer the Swiss franc over the yen in relationship to that, let's say, downscaling of risk. But more on that will be shared inside Discord for you guys to understand. Jan, I have a question for you. How many pairs you analyze per week, and how you choose the pairs to analyze? Because there's a lot of pairs, but how do you choose?
So I'm a subscriber of forexfundamentals.com. So I'm looking at the scores, I'm looking at the statistics there, and it really varies. Sometimes it's only 3, sometimes it's 5. But I try to not go above 5 because I tend to miss opportunities when I have too many pairs on my screen, as I can't be on the charts every single time. But Fabio, let's speak about the exact topic you've just started. I mean, gold rising alongside the equities tells us this is not fear, right? It's more like a distrust in the monetary stability that we have right now.
Yeah.
You just mentioned gold, just selling off and selling off. We've seen, the dollar selling off and gold surging to record highs, central bank buying, and so on and so forth. What do you expect for the next months and the next year to come with gold? Do you think this demand is still there? Do we ease in the terms with the Russian-Ukraine war? Something has to happen, right? I mean,
yeah, no,
we are so overextended. Do you think it can go even higher, 5K, 5.5K, or?
Yeah, no, definitely. So on gold, I'm still very, very bullish. I still expect this within, let's say, the next week to kind of like break into new all-time high, but also definitely push a lot higher. Seasonally or seasonality wise, the month December is always a good month for gold, or at least moving into towards new year. Now, it's all relative, right? Because we have to understand, okay, gold might seem very, very overextended, but there's obviously a natural flow of supply and demand for gold, and a reason why gold is pumping up higher. So gold is trending naturally higher, and the move that we are seeing here is driven by, first of all, the interest rate cuts. So when a country or a government, let me write this down for you guys to understand in the best way possible, but when a country or government, let's say, cuts interest rates, and more specifically, the dollar, gold is likely to rise because one, obviously, let's say government bonds start yielding less return because of interest rates going down. So investing your money into, let's say, traditional US products, such as, let's say, government bonds that are now newly being issued against lower interest rates, they yield less of a return. So instead of, let's say, yielding 5%, they're now going to, let's say, 3%. So what do the large players do? They start buying gold as that is more interesting return-wise. Then second of all, we have inflation. So obviously in the US, with more specifically like the tariff situation, tariffs have been having kind of like not a very heavy effect as everybody would have thought, but they have an effect on inflation. So this means that everything is becoming more expensive, and the more / higher inflation is, the higher gold tends to go. That's important to understand. Obviously, next to that, we also have the labor market, which has been seeing kind of like stress tests. And then naturally, again, to kind of like hedge the downside risk of the labor market, people start buying gold as a hedge. And then we have, of course, this year has been crazy in regards to geopolitics, and is still crazy, right? We have the Russia/Ukraine situation. If you see what Mark Rutte is saying, by coincidence, the guy's Dutch. He's the head of NATO. He's literally been talking about the fact that he expects there to potentially be a World War III. So these kind of situations and these things are naturally now driving gold up higher. And as long as these stay in effect, there's no reason for gold to kind of like see a massive dump in towards the downside. So yeah, I'm still bullish on gold for all of these previously mentioned reasons, and I still see gold heading up higher based on that, and nothing for now changes my bias. So what we can simply just do is not be, let's say, zoomed out too much, because obviously if you look at this on a weekly time frame, and let's say you would say, hey, this is a 50-minute chart, you would be saying, okay, I'm going to expect the pullback. But all we can do is we can go to the 4-hour time frame and just take it day by day or / week by week and understand, hey, this is perfectly normal price action where we're seeing a very clear uptrend, where we had the overall push in towards the downside. We then form a new higher high, higher low, higher high, higher low, higher high. And now we're just waiting for the new higher low to be formed to then again form a new higher high. So simply following that trend further in towards the upside, together with those fundamental drivers, which are still very, very bullish for gold, we still expect further upside prices. Same for silver, same for copper. Looking for higher prices on those. Whereas crypto has obviously been taking quite the hit for whatever reason. Related to risk, where you see that in this situation, gold and Bitcoin tend to be unrelated. But gold is Bitcoin is definitely being treated more like a risk asset at the moment, where you're just absolutely being annihilated as a crypto holder. Obviously, I'm not even going to go into the altcoins, which we've been which have been taking a much heavier hit. That.
Yeah, it's crazy to see, right? Everything since the beginning of the year has basically risen, except Bitcoin, being down now 15% to the beginning of the year, silver 90, gold 126%, even like S&P 500 with 16% is, NASDAQ, super tech strength this year with 21% in the NASDAQ, AI, all that stuff that's coming up. But Bitcoin has really, taken a hit. I mean, we have seen crazy prices. If you just time the markets a little, then you're up probably. But
yeah, no, definitely. It just shows that dollar cost averaging is then maybe the better option. But also, if you look at Bitcoin on a yearly chart, because obviously we always talk about Bitcoin kind of like as being the way to make real money. But if you look at it on this year alone, the average return has been what? If you, let's say, bought on 1st of January, the return has been what? -8%. Whereas if you look at the stock market, let's say US here, you can see if you bought at the beginning of the year, you would now be up around 16%. So it just shows that you would be better off just buying stocks as opposed to buying crypto. Very simply said.
Yeah.
Even
Peter
if
Schwab is going to be happier.
Yeah, definitely. But like, even if you look at last year, 24%. If you look at the last year on Bitcoin, what was that? It was 121%. Okay, well, that's quite the difference, obviously. But still, we need to look at the overall downside risk, right, of holding that crypto. And the average crypto holder obviously doesn't only just buy Bitcoin, but obviously buys pretty much every single, let's say, altcoin as well, in the hope of seeing a 100x or a 50x or whatever. But I'm not sure if you guys have been looking at altcoins But yeah, altcoins are pretty much non-existent anymore, it seems, to a certain extent. Some questions there then on the dollar against the Japanese yen. I mean, dollar yen still stands as a valid long opportunity. It's still perfectly valid now to look for the 4-hour change of character up. And if we see a strong candle close, yes, you have a valid demand zone. I would use the wider stop loss just because of this great amount of manipulation that we've been seeing, but definitely kind of like looking to long this back up could definitely be a good viable trading opportunity there. And then obviously I have EURUSD, which I've explained to you guys as well. I did a good write-up on EURUSD while I was looking for further longs on this. So if you're interested in that, make sure to join Discord. I have a full write-up on it of I don't know how many words. But make sure to check that out. Jan, anything to add? Did I forget anything at all?
I think very round. I mean, we could speak about so many different things. I also find it interesting with silver and copper, for instance. Suddenly there is huge demand as well. You know, silver surprising many by outperforming gold at times this year. It's fascinating to see. You know, the energy or the industry suddenly needs more copper in these times. You know, they always find a way to push everything up. A lot of speculative momentum as well this year. So yeah, super interesting year. I'm looking forward to the next one. It's really refreshing to have this dynamic approach again after 4 years of Sleepy Joe, and you know, America being in a totally different place, the whole world being in a totally different place. Now we're really, you know, executing, and yeah, it's looking good.
Yep, no, agree.
Why is the trading pit better than FTMO? I was waiting for that question, guys. I was waiting for it. Listen, so there are a lot of good, or some good prop firms out there, and they all do their work on a daily basis. It's also something that I like to speak about. You know, at the end of the day, we are all humans. The prop firm space has demanded a lot from, you know, answer my support request in 10 minutes. You know, get back to me here, do this, do that. We are very responsive and we are very close to our community. This is something that when you join our Discord, you will feel. We try to help you guys out as much as we can, not only, you know, with the support, but also bringing great corporations into the trading pit environment, you know, bringing webinars, education out there, and just having a very stable business. We want to ABOC our traders. We want to be sitting in the same boat. We don't want to only rely on failed challenges. This is a model that is probably working with brokers. You know, when you lose your whole account because you over leverage on a broker, that's a different story. But with prop firms, we think in long term. So I really believe that we are building a great network, bringing our traders together, like Radke and Oscar visiting our Madrid office, I think 2 weeks ago, right? Meeting other traders from the trading pit who flew over from Italy. So we want to have a community. We want to have traders who learn from each other. We have great products. We have an own broker in the back end. We have very competitive spreads. And the last thing that I need to highlight is definitely the approach that we have as being a pit. So every trader can come to us and trade whatever he wants or she wants to trade. We have futures, we have CFDs, we integrated a stocks program this year, so you can trade every stock there is right now in America on a dedicated platform, and a crypto program is coming potentially end of next year or beginning of 2027. We think long term, and that's what we're here for, providing you with the best possible support and you know, product sides.
Yeah, I think the main thing, guys, that's just important, and obviously I don't work for the trading pit, so for me it's a little bit different, but like it doesn't matter what firm you obviously at the end of the day trade with, but the only thing that matters for me is that I am heard, you know what I mean? I want somebody to at least just answer my question and be there to kind of like support me when I'm, let's say, seeing that positions are being auto closed or there's a mistake with my account whatsoever. I don't want to have to send an email and then have to pray in the hope that I get a response within, let's say, the next 5 business days, and then the weekend goes over it because I sent the email on Thursday, and then I receive a response on Tuesday, and then I need to send proof, and then you're like 2-3 weeks ahead, and then you're stressing about that 100K account that you worked so hard to get. So for me, the most important thing is that you have kind of like a direct response person, and obviously you're free in using whatever prop firm you want. But the most important part at the end of the day is for me that Jan is inside our Discord server, being able to answer any questions that you guys have. So that's just a big plus that we can kind of like offer you guys through kind of like working together with Jan pretty closely, and why I thought it was pretty fun to get him here on board for you guys so that you can ask some questions to him. Just to kind of like round it off, like I have a question here. One phase or two phase, which one is better? I think that there's not necessarily one better. It's more about kind of like what do you prefer. You can use a one phase if you trade lower risk on live, because obviously the daily drawdown is set at 4% with the max drawdown being 7%. So then I kind of like advise you on live accounts to maybe use slightly lower risk. But if you use a two phase, then obviously you have a daily drawdown of 5% with a total max drawdown of 10%. So that's slightly different, where because the drawdown is slightly larger, you have more breathing room, right? But at the end of the day, the way I kind of view it for myself is that if I have a two-phase account, which is sitting at minus 8% drawdown, the probability, and Jan probably has seen that as well in his back end data, the probability of you blowing up an account that is minus 8% is, let's say, 99.9%. So you might as well just get that one phase, in my opinion, because the probability of you kind of like blowing up anyway if you get to minus 7% is pretty high.
Absolutely.
Otto is asking, Traders Connect is no issue with TTP, right? As far as I know, it's not, right?
It's not an issue. It's not an issue. We're also working on our own solutions here to give you also this kind of, sophisticated, solution when it comes to trading, copying the trading accounts. Judy, I'm working for the Trading Pit. Just wanted to mention that, and also maybe related to the one phase to two phase. Obviously, like you say, it's a lot of risk per trade. How are you trading it from a risk perspective? But also, guys, think about the mental perspective. I think this is a if not even more important point of having a one phase and having one goal to achieve the 10%, let's say, or if you have these two phases where you have an 8% and you are happy that you have achieved it, but then you have to do it again. You have to again prove that you can do 5% on top. So before you start a challenge, just think, what kind of mentality do you have? Do you struggle with this mental approach of like two goals, or you want to just have one goal and shoot for the 10% in one goal? We've seen this in data. And this is a general thing in this phase. The two phase, sometimes people who do brilliantly on the first phase, on the 8%, then suddenly have to restart again into a new 5%, and they the head does weird things. So yeah, keep that also in mind. I think our one phase is very competitive. We have no trailing drawdown there. Lots of prop firms have that. So it's a static drawdown on the one phase, which is, I think, brilliant. I would love to trade it myself if I would be allowed to, but yeah, it's a different topic.
Yeah, I'm very close to blow my account. Which risk do you suggest? I don't know how close you are to blowing your account, but at the end of the day, like a lot of people say, like, if you're minus 8% in drawdown, start using 0.02% risk or 0.2% risk or 0.5% risk. Like, for me, like, just keep on risking the same amount because your edge should prevail. If you got into that drawdown, it's likely that you took 6 or 7 losses in a row, unless you obviously over leveraged. But if you've taken 6 or 7 losses in a row and you have a 50% win rate or 40% win rate, then the probability of the next trade being a winner is extremely high. So yeah, you should just use the normal risk. Lol, where are you trading if you're not allowed to trade at TTP? You can trade all the other firms, Otto, from whatever, from FTMO to whatever.
Exactly. Staying with the big ones there, that's for sure.
Yeah, static drawdown is goated, man. Yeah, 100%. That's why I like the one phases of TTP, man. Like that bullshit of having like the equity drawdown with all of those other firms, for me, together with the consistency rule, is too much of a headache to perform normally, man.
It hurts. It definitely hurts. And I've been testing a lot of prop firms myself over the past years. And Also, this you have to achieve 2.5% when you're funded in order to pay yourself out and stuff. You know, they're just putting stones in your way, which is just not fair.
Yeah.
So how's that stupid saying? From traders for traders. That's kind of what we live for here. Trying to make it as good for all sides.
Yeah, well said. Okay, have a look at G Swiss. Yeah, G Swiss looks good for some short-term further upside. Daily time frame order flow still remains bullish, with this demand zone being in control. We've rejected the monthly open. 4-hour time frame took out internal liquidity here. So yeah, this definitely has potential to kind of like head up higher for now. So yeah, guys, I think that's it for today. Want to thank everybody who took the time to be here, and make sure to leave a like if you guys enjoy these kind of streams. Let me know in the chat, guys, do you enjoy having a guest on board? Hope you appreciate that Jan took the time to be here. Make sure to just say a massive thank you, because it's always nice just to have someone on here who can kind of like answer any questions that you might have, and obviously help us out as a team. Because all I want for us is to kind of have access to whatever resources we need as a team to kind of like succeed with this journey that we all have. So yeah, happy to be able to have Jan on stream. And Jan, any closing words for everyone?
In general, I'm just very happy to be able to support this community, guys. You're all sticking together so nicely. When I see the Discord, you know, you all want to learn and grow together. That's all it takes in trading. You know, keep it up. Stay consistent with yourself. Check in and hold yourself accountable to the team, to the coaches, and in case you need a strong partner when it comes to a prop firm who has your back and who does not play any shady things with you, the Trading Pit is definitely there for you. Fabio is also going to give you some more information. We have the TTP passes running right now. This is our Christmas thing where you can invest one time a little fee, 19.99 or 94.99 into the silver or gold pass at the Trading Pit to give yourself the chance of permanent 20% discounts for the complete next year. We will send some information in the group so you know about it. But yeah, just keep it up. Have a beautiful December, great Christmas time. Enjoy the time with your family. Calm down a little. Recap and get back stronger next year. So thanks everyone for having me.
Super, guys. Thanks so much for being here. Thanks for taking the time to tune in, and we will speak soon. Thanks, guys.
Bye bye.